In this clip, they're talking about how exchanges are going to psychologically keep you buying Bitcoin. You're not going to stop even when the price is $1 million. Check out the clip.
At $1 million per Bitcoin, you log onto your exchange, and they're not going to put up 1 million per Bitcoin. They're going to put up 1 cent per sat. And all of a sudden, in a lot more people's minds, exponentially, it's going to be a shit coin. And you could buy a sat for a penny. And why wouldn't you pay 2 cents for a sat? When you start thinking about, the million of Bitcoin, well, that's a lot of money, but I'd pay 2 cents a sat.
And with that, what's happening, Crypto Crew? Sean's coming back at you, another cryptocurrency video. You heard in that clip there that they're talking about how the exchanges are going to change the Bitcoin price from once it's $1 million, $2 million to start putting the price in Satoshis, because one Satoshi is going to be more attainable than one Bitcoin. Don't let that psychologically trick you. Just keep dollar cost averaging forever and start saving in Bitcoin. Once again, this is not financial advice. We're not financial advisors, but if you look what Bitcoin's done over its life cycle and what's happening, then you'll get it. But if you don't get it, that's why we're here. We're here to educate you and show you what's going on in the crypto space. Taking a look at Bitcoin's price chart, what do we see? What do we anticipate at the current time it's recording? Bitcoin is coming in almost at 31,000. Bitcoin has made a run up over 30,000, almost 30.9K at the current time it's recording. So, looking at the charts, what do we see? What do we anticipate? Now, the lines you have to pay attention to, and what is very important, is this line here, this orange line, and this blue line. Now, why are these important? Because this is the 20 and the 200 moving averages. These moving averages can be used as very important indicators with technical analysis. Now, what do we mean by that? Because these moving averages always pull apart and want to come back together. The 200 holds more weight because it's 200 days of price action averaged out. That's this blue line here. And the 20 is 20 days of price action averaged out. So keep that in mind. It's the previous 20 and the previous 200. So 200 days is going to hold more weight naturally than 20 days. Now, when these become very, very far apart, like right here, this area here, you see that the space there, right now they're diverged, they want to come back and converge. And that was what they always naturally do. When there's run-ups, they always want to come back and intersect and cross every single time. So look here, the same thing happened in the 2021 bull cycle. A lot of space in between the two. And this always happens when the 20 crosses above the 200. And right now, you see here, this is 2017 bull market. You see that there's a lot of space here. This is the 200, so we're not seeing more price action. That's okay. But either way you cut the cloth, you can see that the 20 crossed back here and then took off and started to get further and farther away from the 200. Once that space occurred, that is when it's an indication of, okay, we're getting extremely, extremely overbought. In the bear market, look what happened. The 20 came back down and crossed below and then sort of kept playing around in this channel. Now, this channel is very important to pay attention to because look, this could have been an indication, oh my goodness, the bull market's going to start again. There was a lot of euphoria for those that were around in 2018, 2019, summer of, when Bitcoin went from this low of 3,100 up to 13.8K. People were saying new all-time highs in the summer of 2019, but look, it fell short because we never have put in another all-time high before the next halving. These white lines indicate the halvings. So keep that in mind. This was just a lot of euphoria here. This was an opportunity to sell and buy back in this channel. So right now we're in this wedge pattern still. But one thing you can see here, you see that we did have this run up, but we didn't spike out of this resistance level. We hit our head once, twice, and then came back down from a high of around 31.4 down to here. But now we're converging to this apex area. We didn't even get close to this apex area right here. So Bitcoin does look like it is looking extremely bullish to the upside, and we could see higher price action. But realistically, Bitcoin could come back down and play with your emotions, back down to the 27, 28K, and get really close to this apex before it decides to break out of this horizontal resistance. So this is something that you have to pay attention to, and the halving cycle is something to pay attention to as well. In this macro wedge here, the Bitcoin halving occurred in May of 2020. during this wedge. Note this wedge here, Bitcoin does not, the halving cycle doesn't happen until afterwards. So after the halving is when the euphoria tends to happen. It's based on history. Could this time be different from that lens? That's a possibility. But looking down here at the RSI and looking and comparing to the price action, what do we see? What do we anticipate? So if you see this bottom here, Bitcoin went to 20,000, bottomed out around $3,000. This is right here on the RSI. The RSI bottomed out. And if you see here, the RSI started to stair step its way up. And then once it broke this uptrend here, we flipped from support to resistance and then retested that resistance again in this double peak. And then that's when the bear market officially started right here. Now, where are we at right now? We have bottomed out and we're stair stepping our way up. And we haven't even seen any green indication from the RSI that we've been extremely overbought. This is above the 70 level. So Bitcoin could just keep stair-stepping its way up and then eventually after the halving get extremely overbought and then come back down, break this, flip this support to resistance before ultimately starting that bear cycle. So this is something that you need to pay attention to because it's not going to be exactly the same, but it's going to rhyme. We're not even seeing a cross yet of this 20 and 200. That's something that we haven't seen. And this time last cycle, we had a euphoric run to the upside and the 20 actually crossed. But you see we came back down and retested this downwards resistance because of the pandemic dump, but the 20 never crossed back below the 200. But right now the 20 is still below the 200, but right now we could be converging. So this 20 could then ultimately converge up and cross through this at a later date, and then price action will then continue to bounce off that 20 to the upside and blast off after the halving. So this is what we could see, and this is what we can anticipate, and these are the indications on how you should read these charts, because the 20 and 200 moving averages are the most important. We're almost to that $31,000 threshold. Zooming into the price action once again, we are seeing that this acted as resistance once here, twice. We've hit it 1, 2, 3, 4 times there. And right now we're stair-stepping our way back up towards this. And as you see, we were extremely far away from that 200 right here. So naturally, what are we saying? Naturally, these two moving averages want to come back together. So eventually, this orange line is going to come back up and kiss this, probably closer to this apex region. And then that's when the euphoria might start. Are we going to see a new all-time high before the halving? The halving is here, April 2024. So we're about 6 months, 5 to 6 months out. Are we going to see a new all-time high before that? If Bitcoin does that, that'll be Bitcoin's first time doing that. Bitcoin's never done that over its history. And taking a quick look at the Bitcoin dominance. Why is this important? Because this indicates whether you need to be in Bitcoin or in altcoins. So we've been stair-stepping our way up. And once again, note the 220 moving averages. They are very important to pay attention to. We're far away here. We're far away here. What happened? Bitcoin came back up, the 20 moving average, and crossed. Now we didn't have a continuation rally. Bitcoin crossed, ultimately put in a higher high, then fell off a cliff. This is when the major alt rally in 2021 occurred. Now look what happened. We see this space and we're stair-stepping our way back up. Zooming into this price action, we can see that the 220 are about to cross. And look what happened. The Bitcoin dominance has just been going up and to the right. And looking here, we haven't had a divergence with the RSI yet. And what do I mean by that? A divergence with the RSI, if we look at the previous cycle, we can see here, it got extremely overbought down here, right here. And the Bitcoin dominance went up to about 72, 73% up here. Then we cooled off and then came in and actually put in a higher high, almost 74%. Not much higher, but we put in a higher high. But so the price action went higher, but the RSI, if you look here, we were at 77. Look at this peak. We were at 72. So the RSI from here to here put in a lower high, but the price did a higher high. So that is a divergence, and that's why we ended up falling off a cliff. This indicated here that this was the actual peak because of the divergence. Now, because of that, we can look here, and we haven't seen that divergence yet. Now, this could cool off a little bit and come up and actually put in a higher high, which means this is a high, this is a high, and this is a higher high. But when this comes down and then puts in a lower high, which could be like here, and then have a continuation to the downside, this price right here at this lower high in the RSI, the price will spike up. So the price goes higher, but the RSI has this divergence. This shows you that this will be the time to maybe diversify into some altcoins. And if you look here, this could be the peak for the Bitcoin dominance for this cycle, around 57.7, closer to 60. We could even have a wick up above this and go up to 60, and then ultimately, come back down, and this would be that ultimate alt rally that people have been waiting for. And this is when altcoins tend to outperform Bitcoin. So it's something that you want to pay attention to. These charts matter. Remember, the 20 moving average and the 200 moving averages, just in technical analysis, those are the most two important moving averages. That's something that you have to keep in mind. Before we leave you, look here, we're still stair-stepping our way up. Bitcoin is going up and retesting these levels. Are we going to break above this, or are we going to get rejected again and get closer to this apex range? Keep this in mind. Let's zoom into this price section really quick. We see that we've came up once, twice. Is the third time going to be a charm, or are we going to cool off again, come back down to the 27, 28 range before ultimately getting above this horizontal resistance? Right now, pay attention. It's a dollar cost averaging environment. Bitcoin is not going to see 20,000 unless there's a black swan event. That could happen, but right now it's seeming pretty bullish. And with that, I'm Sean with the Bitcoin Bros. You guys like this content, go ahead and smash the like button. If you haven't subscribed to the channel, go ahead and show us some love. We appreciate the support. With that, that's all I have for you today, and I'm out.